All right, well, welcome back once again to module number 2. This is lesson number 5, and we're going to talk about mortgage brokers. Now, a lot of people still like to use banks, and a lot of people in Canada especially, they have a preference to using banks, thinking that the banks are going to give them or create a better relationship and ultimately give them better options and rates, etc. The sad reality is that is no longer the case. Those days of the personal relationships with the big banks are long gone. At least 20 years ago, they started to change the industry to make it that it's not so personalized anymore. In the bank's mind, when it became too personalized, there was the opportunity for fraud, people doing favors for other clients inside the bank. So they started to move the managers around. That was the logic back then. They're now starting to see that that wasn't such a great idea, and they're getting back into that personal feel-good relationship type of banking. However, it's never going to be the way it was back 20, 30 years ago. So the reality is that the other option is mortgage brokers. And mortgage brokers, you can create that personal relationship with, especially if they've been in the industry and they plan on being in the industry for a long time. And the nice thing about a mortgage broker is that once they get to know you and understand your business, they then know where and how to shop your particular deal around to. So unlike a bank, when you go into the bank, you have their services, their options, that's it. Having said that, the banks have started to see that they're losing business to the mortgage brokers. So now what they're doing is they have a couple B lenders that they'll use as secondary sources. If they themselves are not able to provide the financing, they will open up to a couple B lenders and run it through them. However, they're still limited to only 2 or 3 options at the very most. When you go to a mortgage broker, a good mortgage broker is going to sit with you and ask you, again, like the accountant, they're going to ask, what is your business plan? How many properties do you plan on owning? What is the structure? What's the exit strategy? All of these questions are what the mortgage broker should be asking you. If they don't ask you these types of questions, then that may not be the mortgage broker for you. The simple reason that, the vast majority of mortgage brokers are in the industry to provide mortgages to single-family homeowners. And that's fair because over 95% of the mortgages that are transacted on an annual basis are for single-family homes. Less than 5% of all of the mortgages are actually for commercial-grade mortgages. So it is a very small percentage of the market that you are working with or working in. Therefore, you need to realize that the number of mortgage brokers and even banks that are going to be interested in working with you is going to be very small. So you need to shop around, interview a lot of different mortgage brokers to find the one that works for you. And again, you definitely want to find somebody that you connect with on a personal level so that you can communicate well with them. You want somebody who's going to work with you, not for you. You want somebody who, the bottom line is their interest is getting paid. And if they put you into product A, they might make more money than if they put you into product B. Yet product B might be a better product for you as an investor. So you want to make sure that they are working for you and they're going to put you in the product that suits you best, doesn't pay them the most. In Canada, well, now this is a stat that I just came across here recently that, and in 2011, so it's a few years ago, in Canada, less than or approximately 32% of people were using mortgage brokers. The vast majority are using the bank still. Now, I think it's closer to 40%, 60% now, but it's still, there's a lot of people still believing they have to use the banks. In the US, it's very different. It's actually over 80% of the people use mortgage brokers. And again, the challenge though is that, just because you're using a mortgage broker doesn't mean that it's the right person for you. You have to make sure that it is the right person for you, that they're putting you into the right product, and that they're operating from a a level of integrity and that they're doing the right thing for you and not just lining their pockets as well. The bottom line here is that, well, these stats that I pulled up from another presentation a few years ago that somebody else did, was they were claiming that 4% of the people buy real estate as an investment. And only half of them, so 2% of the population, are buying multiple properties as a real estate investment. And that's only 2 or 3 properties. So the fact that you are enrolled in these programs, you're actively looking to become investors, puts you in that top 4% automatically. As soon as you own several properties, you're in the top 2%. And the fact that you're actually gaining some education so that you are operating from a level of being an educated investor, that puts you in the top 1 percentile of all of the investors, well, of all of the people buying properties in the country. So that puts you into not only a very elite group, but it puts you into a very small group. And again, the mortgage brokers aren't necessarily going to be lining up at the door, knocking on your door wanting to work with you, because you are such a small percentage of the business that's out there. They're going to make far more money going after the other 95-96% of the people buying single family homes out there. Yes, they might make a little bit less per deal, but they're going to be making a lot more deals. So you need to understand that, where the mortgage broker is coming from. So to find a mortgage broker who has the knowledge and the willingness to work with you as an investor can be a bit of a challenge. The best way to find somebody like this is through referrals. So I would go to investment clubs and ask other individuals who they're using for their brokerage financing, and get the referrals that way. Mortgages through a mortgage broker can be, well, it depends. If it's a residential single family mortgage, it can actually be cheaper for you to go through a mortgage broker, because the mortgage broker is paid a commission from the lender. So whatever lender you end up borrowing the money from, that's who's going to pay the mortgage broker. But that's for a residential mortgage. For a commercial mortgage, the lenders don't pay the brokers near as much. Some pay, as much as 50% what the residential mortgages would be paid out. So the mortgage brokers, because they don't make as much money, they're going to then have to charge you some fees in order to facilitate the transaction. That's part of the doing business. If you go to a bank, those fees can be significantly less. However, you have much less choice options out there. So sometimes it might be worthwhile paying the higher fees to the mortgage broker to facilitate the deal, because you're going to get a better deal, a better mortgage, or you might even just get a mortgage, which is ultimately what you want as well. You have to be careful with your mortgage broker. You have to make sure the mortgage broker understands your plan. So whether you are in the 5 Homes to Freedom program or the Apartment Building Wealth Generation program, you need to be very clear what your goals are, and you need to explain these goals to your mortgage broker. So for example, with the 5 Homes to Freedom program, the rules keep changing. So as of, while I'm recording this, as of right now, an individual can't qualify for more than 4 single family residential mortgages. So that becomes a challenge. So you need to have a mortgage broker who understands how to work around this. You also need a mortgage broker who understands that you want to be able to have the flexibility of paying down large chunks of money on that mortgage without penalties. There's not very many mortgages or lenders out there who will allow that open type mortgage. You also want to make sure you don't get yourself locked into a mortgage that has high penalties if you were to sell that property prior to the mortgage coming up for renewal. So for example, when I was out west, we were planning on living there for quite a while. We bought a house. Less than a year later, we changed our mind, decided we were going to move home. Well, because of our employment status out there, it was difficult for us to qualify for a conventional mortgage, so we ended up with a B lender, and part of the I guess not the rules, but part of the guidelines within the documents of the B lender was that if we were to pay out early prior to the mortgage coming up for renewal, the penalty was significant. So for us, the penalty was going to be $30,000. It wasn't just a matter of 3 or 4 months interest. It was a lot of interest. So it was not in our best interest to sell the house that year. We moved home, we rented the house. A year later, that penalty was dropped down to about $15,000. We were able to manage that $15,000 penalty through the appreciation and the sale of the property then. So you just need to be aware of all of these little things that are inside a mortgage agreement. It's not always about the interest that you're paying. Sometimes you're better off to pay a half or even 1% higher interest if you get better terms. But your mortgage broker, your mortgage agent should be explaining this to you and walking you through that whole process. They are supposed to be the experts within the financial field. So find the right one that you feel comfortable with. Again, I believe probably the best way to find somebody that's going to work with you in what you're doing here in these programs would be to go through a referral. So go to either visit the site of a real estate investment club and check out or ask the group for some referrals of other good quality mortgage brokers that they've been working with in the past, and that's probably your best solution. The other nice thing is that it depends on the licensing of the mortgage broker. Some are able to work right across the country. Some are only able to work within their own state or province. So you need to be aware of that as well. All right, so that's pretty much it for mortgages and mortgage brokers. Despite the fact that there are some fees with them when you get into the commercial, I still believe that they are a better source to go to than the banks are, simply because they've got a much broader range of lenders that they can go to. And when it comes to single family homes, to me it's a no-brainer that you should be using a mortgage broker, providing you can get a good mortgage broker who understands what it is you're wanting to achieve and that they're working for you and they have your best interests in mind as well. So that's it for lesson number 5. We'll see you on lesson number 6. Take care now. Bye.